Hello guys and welcome to this YouTube video. In this video I'm gonna explain to you guys about structure, how you stay in a trend, but also characteristics of a trend and how price moves with the moving average, and a little bit about candles as well, to show when price is ready and when is short okay in a market, and where most people gets trend wrong. So I was thinking that we could start with this. Very simple. As you guys can see, this market has been moving at higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high. So this market is what we call an uptrending environment, right? Very easy. And what you guys need to understand is that each high in an uptrending environment is acting like liquidity. So above these highs right here is where price basically wants to target, right? Because the order flow is to the upside, and these legs right here to the upside is demand just flowing in abundantly into this market by composite man or institutions or big banks that is just buying up this asset. And whenever you see a correction to the downside, just like this, big banks are buying up all this selling right here to reaccumulate price to drive the price even higher up. And here, and the reason behind it is because they want to re-enter this market, right? And to buy in a better price. So they drag the price down in order for them to buy at a better price, but also for new banks or new institutions to start buying right here. That's why you oftentimes see whenever price has a correction like this to the downside, price doesn't really want to come back. We can come back, but you guys need to understand that if real banks or institutions has been entering inside of this area, they don't want to see price fall down like this, because that would mean that they would lose money, right? So they start to buy here and sell right here. And that's why you have this correction to the downside. Price is reaccumulating again. And same thing goes here. Big banks are taking profits, price goes down, they're starting to reaccumulate. And whenever price starts to go up, it's probably because some institutions are behind it, but also they want the price to go up for them to make profits, right? One vital thing as well is here is where most people get trend wrong inside of all these areas right here. The corrections to the downside, the counter trends to the downside. So whenever price drops just like this, people look to the left. So let's say price is here. People are looking here to find their order logs. So they look to sell these high right there and these high right there. Also this, because it's an order block, price needs to go down from this order block, and especially when it has a fair value gap or imbalance, people are gonna try to sell this. But because of how price is moving and how structure is working, this has never been the case. Order flow is to the upside, which means that every top acts like liquidity. So price just want to reach this high and continue this uptrend. And sure, this counter trend can work if you take shorts around this area, but you need to have data on it, right? So you need to have evidence that that is working, right? That is the first steps. So now we will jump to real examples, how to position yourself in a trend, and how does it look when price is ready. I can also cover this. I would only look short here. Let's say that price is going down like this, so we're breaking structure to the downside, and then pausing on the EMAs and start to go down. I would only look for shorts here, at this leg right here, because you kind of need to create a story behind price, how price is moving. So price is breaking down. So I would tell myself this is probably for the purpose of reaccumulating. So that means that price will probably go up. Someone is reaccumulating orders here to drive the price even higher up when we break structure. So I wouldn't look to go short right here. So I would wait for price to show me that it wants to go short. So whenever price creates this space right here on the EMAs and goes down again, we have basically broken down 2 times. So that would confirm shorts for me. And let's say that price would do something like this to the upside, break structure again to the upside. I would probably look to go long here. This is only a bigger correction to the downside for the purpose of reaccumulating, and I will start to take longs along these areas right there, or even wait for something like this and look to go long right there. All right, so hopefully you understood that. If not, we are gonna dive a little bit deeper on the real chart. All right, so let's delete this. I'm gonna use 1 time frame right here. So now I want you guys to make up a story. So the story here behind this market, we are looking at Nvidia. We are making higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher high, and higher lows. All right. So this structure is bullish. We have broken down right now, and we are surfing the EMAs. This is probably for the reason behind this is probably to reaccumulate orders to go long again, right? Because the structure says so. We're not looking at some zones over here. These zones, you guys need to understand as well that every single high here acts as liquidity to the upside, because the structure is to the upside, which means that every high acts as liquidity. You can see that every high in the past has been liquidated. And the price is holding up on the EMAs, surfing it higher. So if a price can show us some good move to the upside above this EMAs right here and pause, we will take a buy position. And that's how you enter yourself in a trending environment. All right. So, but also guys, I want you to look to the left a little bit right here. And if you have watched my previous video, I was talking about supply line, something like this, something like this, something like this, and this. As you can see in the past here, this would probably be in a break even or a -1 if you protect it under these lows right here. But if you would have just bought one of the candles right here, or one here or here, it would have worked, right? And this supply line, I would visualize it as a channel. So price moves higher up and comes down just like this. And whenever price comes up and pauses, I would simply take it, right? So let's see if price gives us that. So all I see now is that this is the target. Price is moving in a trending environment. So I have no reason to look for shorts just yet. I will only look for buys. So huge candle to the upside here. Let's see if we can pause. So market is pausing right here. There's nothing for me to do just yet. So price is breaking structure here, right here. So if we can pause right here, I will look to go short. So price pauses here. So I would simply just throw a short here to see if we get tapped in. If it don't happen, we just cancel it and we draw our supply line just like this. This is a bigger correction to the downside, but I will look take this market long if we can do that. So if price can come up a little bit here. So this is a fine short, I think, in this market, to just set up a short right there, because we have broken structure, and then we're continuing to breaking structure. So just protect under this high, and we will simply have a management rule that says 1 to 1, and we are in a break even. Just taps us out immediately, perfect. So that's a -1, and we still have this supply line. So I would want to see if we can pause, or let's see if we can pause here, just like that. Above the supply line, we're pausing on the EMAs. Our next liquidity is definitely here, I would say. Same thing goes here, 1 to 1, and we are break even. So we're simply as break even there, and there comes an opportunity as well for you. So let's just take that as well. We could simply have just a very easy management system that says 1 to 5, and we close the whole trade. Just like that. Both of these trades are +5, so -1, +5, +5. And we're still going, the trend is still going, and it looks very good. So let's see if price does. So guys, you need to understand that whenever price has correction to the downside, this is a huge opportunity for you to, because you have now this understanding that whenever price is trending up, every high acts as liquidity, which means that the likelihood of price reaching above this high when we are in a trending environment is very high, or very high. It's much more higher than that we are gonna start a downtrend, right? And here you guys see as well, if you would have maybe marked this order block right here, maybe you would have made money, I don't know, but every order block is getting liquidated all over again. And whenever people are trying to sell this creates even more liquidity to the upside, even more. So let's see if price is flat, having a correction to the downside right here. Draw your supply line, wait for a pause, just like that. So let's see what price does. So you could simply just throw a buy stop right there. Maybe you have a protection under this low right there, and wait to get tapped in. You can even throw like a stop loss right there. All right, so there, 1 to 1, break even, 1 to 5, full partial. And price is just exploding because every high acts as liquidity, and whenever price is having a correction, so we are having our counter trends, remember, in an up moving market. People are gonna try to sell this, and here is where all the reaccumulation is happening. So big institutions are entering here in the position in this area right here to get themselves in this market, to take to buy, basically buy this market right here when we are surfing the EMAs to sell their profits right here. So let's record that. That's a +5. And price is just exploding higher up. So let's just wait for our correction. People are looking to sell this because we have made a correction. Draw our supply line just like that. Every high acts as liquidity, remember that. Well, let's wait for our pause. We don't get our pause, that's fine. price is having a correction to the downside again. So let's just wait. So basically what I want to see here is whenever price is passing up, I want to see a big buying coming in and then a pause. So if we can pause here, let's see if we can do it. Something like this, absolutely. Simply just buy this, throw your stop right there under that low, target 125. Taps us out, that's completely fine. Structure is still holding up very nicely. As you guys can see, we are creating higher highs and higher lows, higher highs and higher lows. So price is flushing down here. I would probably take this as low. So now what I want to see, we have our supply line, just like that. If price can come up and pause, something like this, I would simply get tapped in. I look for my 1 to 5. This is a break even, so I set my full close at 1 to 5. And it reaches our take profit plus 5, and here you have opportunity as well to go long. But we are now focusing on these inside areas, on this pauses right here. So what I want you guys to see here is that whenever price is basically having a correction, just like this, and we are moving to the upside, every single high, as I have told you, is liquidity. So if you know this, that these corrections to the downside is just for the purpose of reaccumulating price to go higher up, you can now simply just draw your supply line just like this little channel, wait for money to come in, so strong buying, and then a pause on the 5, 10 or 20 MA, and then buy this high. And yeah, we are now at live price, so there's nothing for us to do. But thank you guys for watching this video, and I see you in the next video. Hopefully this helped.